This was another wild week in the markets. First off, read this disclaimer carefully. So let's see what happened. So this is the status. The best performing group was Stock Market Overview, 9.47% this week. The bearish group lost the most, minus 6.58%. The thing is that what happened this week, it affirms a bearish thesis, because these kinds of very violent rallies are very typical of bear markets. And there were rallies in products that you would expect to go down if there was genuine bullishness. So yeah, we will look at that pretty soon. If you look at the entire newsletter, you can see that the Home Builders Bull ETF rallied 189% this week. Huge win. Being bearish gold miners was not a good idea. Minus 65.65% plunge. Year to date, volatility is still the name of the game. 633%-ish gain. Being bullish crude oil has been disastrous, with this 3x ETF plunging almost 99%. If you look beyond, the leveraged products, you can see that Boeing had an amazing week, 70.51% gain. Approach Resources plunged minus 63.50%. For the month, you can see here volatility, also year to date, is the name of the game. Amplify Energy is the worst performer both for the month and year to date. So let's go down here to Stock Market Overview. So you can see that there were many huge gains for the week. Only the volatility index went down. The interesting thing here, okay, with these huge gains, you would expect the volatility index to plunge, but it didn't. Minus 0.76% pullback in the volatility index is nothing when it is up 375% year to date. So obviously people are still not really that bullish, okay? This seems a lot like a counter trend rally during an overall bearish market. So we are approaching the end of the month now, so we will look a bit at different time frames. Volatility is the big winner this month. The biggest loser is, well, the biggest of all losers was obviously here Latin America, minus 36% plunge. So Nasdaq is actually, relatively speaking, the best performer, but still it lost almost 10% for the month. So here is the country ETFs. A lot of gains here for the week. Only Pakistan and Nigeria posted losses. But then again, if you look at the month, huge losses. Got some very deep one as well here. South Africa losing minus 30%. Minus 36 here for Colombia. Year to date you have a deep red. Only a few spots where the losses are a bit more modest, like in Switzerland here at 14-ish%. And also here as an example in Qatar. If you go here to the doom and gloom portfolio for the week, you see losses. However, the interesting thing is that gold had a rally. If there was all of this bullish sentiment, genuine bullish sentiment in the market, we would not expect such a significant rally in gold. That's why you need to be very skeptical about the rally we have seen. It has a lot to prove after the massive plunge we saw earlier. You can see year to date here, the average return is 19% for all of these, which is So you can compare 19% here for the doom and gloom portfolio with minus 31% here, and that's for all of these countries. Fixed income. So what happened is big rallies across the board. That's also a bit suspect. So yeah, big rallies here in fixed income, even though we had dramatic rallies here in stocks. Huge gains here for investment-grade corporate bonds, also high yield and municipal bonds. The year-to-date strongest gain here is from the 20+ year treasury bond ETF. Emerging markets being the weakest performer here at minus 15% year-to-date. In the forex market, you can see here that the overall message is that the US dollar weakened against a bunch of currencies, especially the Norwegian kroner, but that's because the US dollar strengthened dramatically, and that is still reflected year-to-date. But the rally against the kroner was so extreme that you would expect to see some pullback, but this pullback is really substantial. And it is a problem that we have these moves in the forex market, because the forex market is supposed to be more mature and developed, but this is just Looney Tunes. This is behaving like a penny stock, so yeah, it is troubling to see that forex is going a bit bonkers. If you look at your year-to-date performance, you see huge gains here for the US dollar against the Brazil real, the Russian ruble, and against the South African rand. Here we go to natural resources. For the week, you see that there's been some significant gains. Palladium, as an example, 41%. That's a pretty darn good performance for the week. And that's the biggest gain. The biggest loser here, minus 5.16%. That was lean hogs. Year to date, you do see a lot of losses, but palladium, big win. Gold. And if you look at the week here, silver and platinum had very strong weeks. That's also very interesting. And we are seeing this decoupling from the physical gold price and the paper gold price. Same goes with silver, so something is going on. Okay, there is something cooking in the market that could become more dramatic. So let's, of course, you can always stop the video and look at what you find most interesting. We need to kind of power through it a bit. So for the specific strategies, strong, weak performance. Only loss here is from the market neutral anti-beta, but the year-to-date performance is still very strong, 15%, way better than the stock market. The market neutral momentum is the king of everyone, 24%, and it also had a win for the week when there was a huge rally in the stock market. So Mom is really pulling on a strong performance. Very impressive. Now we go to the sector ETFs. Huge rallies for the week. Biggest winner is real estate, but if you look at real estate year to date, well, it's still down minus 34%. So yeah. The weakest rally we saw was actually in energy, which is troubling given that energy is down the most, both for the month, year to date, for the year, and over the last 3 years. So the energy sector is really in trouble. So let's go to the basic materials. Big gains across the board. The gold miners, the junior gold miners here, 29% for the week. That's huge. And if of course you use the leveraged products, then yeah, that would be a much bigger gain. Silver miners also, huge gains. The weakest performer here is agriculture, but still it managed to eke out some gain. If you look at year to date though, we do see a sea of losses. Everyone is reporting a loss. the best performer is the precious metals. This is this ETF. Here we go to consumer cyclicals. Huge gains across the board. This one is inherently bearish. It uses these bearish strategies, so you would expect it to go down. Year to date, it still is the best performer by a long shot, so there's that. So all of these moves on these different time frames, they need to be compared against each other. So here you can see, so let's look at the strongest performer for the week. That's Mariana. Oh, amazing, 25%. That's of course amazing for the week. Year to date, we are still down, minus 29%, minus 66 over the last year or so. Financial services, you see everyone reported a gain here. You got global IPOs, the weakest performer. Strongest rally here was in financial technologies. So fintech is definitively the most interesting space in finance at the moment, because many of the companies in finance, they have not transitioned sufficiently to the technological era. So I am very bullish on fintech. So even though I'm generally not into like buying plunges during a bear market, if I had to buy, I would definitively look at the industries that have huge growth potential. So in that sense, it's more logical to look at some of the smaller companies, medium-sized, instead of like the companies that are these giants that can only grow if there is an increase in the overall population. Year to date here for financial services, a sea of losses. Best performing is global IPOs year to date. Real estate, deep losses year to date, but huge gains for the week. They all participated in the rally. Consumer staples, gains, but a bit more muted. Agribusiness, big winner, but it is the biggest loser year to date. So this goes to show you that some of the biggest losers can also become the biggest winners in a different time frame. Because when you are down this much, then a move up, it can become much more substantial percentage-wise. But also you need to take into account that this is also very volatile, because these are very big moves. Not for the faint of heart. Healthcare providers, big gain. Also genomics, one of my favorite industries, which when you look year to date, it is the smallest loser. So all of these have lost, but minus 6.44% is a much smaller loss than, say, phase 2 and 3 clinical trials here. The medical breakthroughs ETF, to minus 26%. Utilities, gains, very substantial gains actually when you consider that these are utilities. Communication services, networking and smartphones, biggest winners. Media, biggest loser year to date. Energy, deep red here year to date. Oil services only managed to eke out a 7% gain for the week, which is not impressive at all when you consider the big losses over the longer time frames. For the month, and we are at the end of the month now, minus 54%, so really tough times in fossil fuels. Here are the industrials. Only the shipping industry lost for the week. Huge gains here for global airlines, aerospace and defense. But global airlines is also one of the deepest losers. Shipping is the one who has had the hardest year-to-date performance, minus 65. And it is rather troubling that it also had a loss during this major rally in the stock market. So people are really not having any faith in the shipping business. Then you have the final sector, that is technology. An average 11% for the week. average minus 16% loss year to date. Internet of Things, huge rally. Cybersecurity also an industry I have a lot of faith in. Israel Technology, big gains. AI and big data. Semiconductors. So let's now go to the themes. So e-commerce had a huge week, almost 28%. That's really impressive. The year-to-date performance, it is not, well, minus 22-ish% is a huge loss for sure. But there are, other places where there's been much bigger losses, so. But it just goes to show you how violent these counter-trend rallies can be. This is pretty substantial. Also quite impressive here for the military industry, 18%. So if we actually look at the best performers here. So Boeing, big performer this week. Teladoc, best performer of the month, 31%. Also the best performer here year to date, 96%. Orion Energy Systems, over the last year, 352. So here is artificial intelligence. So the year-to-date average is quite deep in the losses, minus 18%, but 9.41% year-to-date. You got like Alphabet, IBM, Baidu, Umbrella, Computer Vision, Batteries and Cordless Electronics, Sociedad Química y Minera, 33% for the week, and that's in the lithium business. And we need to pick up the speed a bit there, so Mitech System, huge winner in biometrics and cybersecurity. Also, year to date, pretty darn good performance, relatively speaking. Then you have blockchain, Monero and Ripple, huge gains. Year to date, Monero is the king of the hill in the clean energy space. Year to date, everyone has posted a loss, but the smallest loss here is from Terraform Power, which is in the sun and the wind business. Next Era Energy, Jinko Solar, Vivint Solar, impressive gains for the week. Cold value stocks, some big moves. Cybernetics and Bionics, Restoration Robotics, they are into hair restoration, almost 45% for the week. Quite disturbing that Rewalk Robotics, it had a loss this week, this month, and year to date, so that one is really in trouble. Devastating sell-offs, you have Cituro Therapeutics, big gain. Discount retail. So discount retail is one of those that you would expect to benefit from a recession, because people need to buy cheaper stuff, and there are some pretty darn huge moves here. Wendy's, TJX, Five Below, these are huge moves. Still here in the red. You can see that Walmart actually had a bit of a loss for the week. But year to date, this is it is one of the strongest performers, and for the month, it is the best performer. For the dividend investors, Lowe's, big gain. For the month here, you can see that the Consolidated Edison is the one that lost the least. That's in the utilities space, paying a regular dividend. So if you go to e-commerce, Wayfair, huge. Carvana, used cars business, these are very impressive gains. And e-commerce is also one of those that benefits from the contagion situation when people need to stay at home. Here are the education disruptors. Environmentalism, advanced energy systems, smart grids, big move. Best performing year to date here is Plug Power. The one that lost the least for the month is Badger Meter, water management. Femininity, All Brands, big winner for the month. Shiseido Company, beauty products, lost the least. Financial technologies, Blucora, and you got Square, big gains. Virtue Financial is rather impressive, so gain, gain, and gain. Okay, we really need to pick up the speed now. So here we have genomics, big gains here, and you can always, of course, stop the video and look at what you find most interesting. Yeah. Interactive entertainment, Internet of Things, Interdigital here, Netgear for the month, masculinity. We got Texas Roadhouse, Sturmruger and the Company for the month. Then you have the military industry, Kratos, Defense and Security here, big gain. Then you have Northrop Grumman, best monthly performer. Here are some other themes, bunch of green here. Best performer of the month is Patient Independence. So that's basically any company that enables patients to get treatment while at home. So here are the most hated industries. A mixed bag. Coal had a rough time. Gambling had a good time this week. Nutrition and fitness. United Natural Foods, best monthly performer. Online video and audio. Best performer is Netflix for the month. Patient Independence, Teladada, huge gains, very impressive. Portable technology, also a very powerful trend. Nintendo is the big winner of the month. Processing of information. AMD, the big winner. Biggest loser is Broadcom. Robotics and automation. Biggest winner is Teradyne, test equipment. And the biggest loser is Accuray, medical robotics. Self-driving vehicles. AeroVironment, drone technology, biggest winner. Biggest loser is Boeing. But Boeing had an amazing week. Here is Shit Hit the Fan by Precious Metals. And this is where we saw these huge gains, with an average 24% for the week. A mixed bag here for the month. But, yeah, very interesting things. Here is social media. Biggest winner of the month is Match Group, but still in the loss of minus 3.88%. Yelp is the worst performing, because people need to stay at home, so they are not going around at the restaurants. Space exploration, interesting things happening here. Brooks Automation is the winner of the month. Loser is Laurel Space and Communications. Surveillance and security. Axon Enterprise. Winner of the month. Loser is Patriot One Technologies, weapons detection. The international investor, you got China Construction Bank is the winner of the month. The big loser is Taiwan Semiconductor. The rich get richer. The biggest winner is Hermes International. Biggest loser is Marine Max, recreational boats. The tiny challengers, everyone is in the red, but the biggest winner here is Orion Energy Systems, relatively speaking, while Aliqua Biomedical in the hydrogel business is the biggest loser. Toxic Energy, the winner of the month, Uranium Energy. The big loser is Diamondback Energy. The winner of the month for underdogs is Kraft Heinz. The loser is Bed Bath & Beyond, which had a rough week, rough all over the place. We love our pets. 1-800-PET-MEDS, winner of the month. Pet IQ is the loser. Here are the ones with a weak statistical correlation with the VT ETF. So Coty is the biggest loser of the month. Biggest winner is Clorox, consumer staples. And here are the workplace disruptors. So you got some very big gains this week. The only one with a gain for the month is DocuSign. So they make it much more easier to sign contracts digitally. Now we go to the leveraged products. So let's go through these. Here are the long market overview, the bullish ones, huge moves for the week, in the red for the month. So these have, been speculative ways to trade the counter trend rally. Here is the short market overview. Year-to-date performance is still pretty strong, also for the month. So the bears are winning out. Here is being bullish country stocks. Huge moves, but deep in the red for the month here and year to date. Short country stocks for the month, a bunch of wins here. Year to date, the only one with the loss here is actually the Nasdaq ETF. Long sectors, big gains for the week, but month has been very rough. Being short sectors, average gain here for the month is 10%, year to date 66%. Being bullish subsectors, average for the month here is minus 56%, so huge loss here for these subsector bulls. These subsector bears are looking at an almost 1% gain. Here we got being bullish fixed income, big gain for the month, 13% average. Also year to date approaching 51%. Being short fixed income, red. Being bullish natural resources, huge gain for the week though, but the month has been very rough. Being bearish natural resources, also been pretty rough, but year to date we have seen 42-ish% gain here, but a very mixed bag. Big gain here for natural gas, but huge loss for those who were bearish, the gold miners. Here is long and miscellaneous, so this is a bit of a mixed bag. Average 12% for the week, but big losses on the other time frames. But you got some big winners here. The volatility products have seen huge gains. These are leveraged. For the week, huge move here for home builders, European financials, industrials, and the FANGs, and the global high yield. So, a bunch of things happened this week. Very interesting times in the market. Of course, you definitively want to be very cautious, tread very carefully, because this is super volatile. Massive massacre of bulls initially. Now we have seen the bears having a bit of a rough week, but then again, as you saw with fixed income, gold, and the volatility index, there are strong signs of concern in the market. So this rally we have seen should be treated with a lot of suspicion, because it has a lot to prove. And if we look historically at bear markets, it is very common to have huge counter trend rallies. Whatever you do, of course, you want to let the trend be your friend.